Take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. Just come right on into the charts, shall we? Bada bing, bada boom. Here we go. So yes, I'm in a little spiffy number. I have a wedding to attend later today. We have it's now 6:48 in the morning my time on Sunday, wherever you are in the world. If you're in America, it's the evening on Saturday. Hope you're enjoying your Saturday evenings. Where we are currently for BTC in this diagonal fib level, we have flirted with the idea of the 706 rejection here, and we are at the 236 entry point for a trend-based fib extension level to the downside of a short. And if this would go down to these regions here, the next point of interest would be down at the 6.5 down here at 28.581 ish region. And then if you break down to there, you go to the 618 region, and below the 0.5 the equilibrium point of this would be the 26.5 region. So this is an interesting diagonal fib pitch fan idea that I've had up since January. So this kind of has been holding true in some way, shape, or form. How do you get that? Well, you go to your pitch fan tools. They are located, under your fib retracement stuff down to pitch fan, and it requires 3 clicks from you to open it up. You get the impulse plus the retrace, and it will give you a nice little pitch fan here. The settings I have are the 236, the 382, the 0.5, the 618 for the golden pocket, some institutional levels, the 0.65 and the 706, and then the 786, 886 outskirts. So we previously had reached the outskirts. It was about 2 weeks ago when we saw this outskirt and the cross down event and this rejection of this daily trend line, or support line, resistance line, and then we saw that drop to the downside ensue. Alright, so we previously flirted with the idea of rejecting the 618. We did get bought up somewhat into the 0.5 region, and now we are getting rejected again on this resistance level, which also happens to be a retrace of the 618 here to the T by the looks of it. So we got that daily rejection on the 618 of this retrace idea from here, from the top to the bottom of this. So are we going to get bought up here and head further up? Well, in order to figure that out, we need to look into the liquidity. What is the liquidity heat map here? Well, this is when people lock their liquidity in the charts and refuse to use a stop loss and get burnt to a crisp by the market maker and get repossessed and all that fun stuff.
Fatality. Yes, and
this is why you should use a stop loss. So we're going to use the 1 minute time frame to get started here, as it looks like there are more shorts being opened as we create this rounded top idea. So they could peak out to take this pool at 29,522 out just off the immediate drop here. We did see some pools open here at $148 million, 29,522, and down here 61. So more than double opened in shorts off this drop here, and we retraced back up to reclaim this 100x in short liquidity. So could they come up to the 29,522 region? Did they spark enough interest to create an imbalance to go up to this region? I have no idea, but this is what we start to look at, and we look at these pools stacking up. This drop down here created these pools of shorts to longs, and the short pools are thicker than the long pools, so they could come back to take these guys out. However, as you look below, you see that there is a $6.56 billion long imbalance on this 1 minute time frame, and you have this long volume strand over here to the right from the black price action. And if you look above this line on the right hand side, you see that there is more soup. I like to use ramen noodles as the reference, and so you see more broth on this side as opposed to this side. So could these lucky campers have opened up their short in success to see it come down into this to spawn some divergence? That could be the case. There is a thick band here at 28.59 that could be gobbled up. When they do start to make a move, as you see, these guys did get paid. Their pools did not get retraced back into at 280 million, and they did come up and pay those guys, but then they paid the price and got gobbled right back up as they didn't close out the trade, and it came back to them. So as it starts to build the narrative, if it starts to go down into here, you'll start to see more imbalance open to the shorts, which causes it to bounce back to the shorts later. So this is why you set your stops into profit and trim as you go because there are no guarantees it heads in one direction permanently. So if we look over here, we see that the broth and the noodles of the liquidity are sparser, if you will, from this. If I took an equidistant move down to this region and an equidistant move up to this region, it would pay me more to go down to here. So just off this time frame alone, I would suggest going down to these pools below and grab some of these stacked up liquidity pools and see what happens after that. Now let's expand our vision to the higher time frames of the 7-day and above and see how that's working out. Let's see how everyone's doing. I got a new monitor set up, so these specs are a little bit wider than the YouTube dimensions of 1080, but it should show up in better resolution, I hope. Let's see if it's how it's going. Booyah! What's up? So hopefully the stream shows with that like water underneath the panel and the stars up above. So hopefully it looks nice. All right, so we'll go to that 7-day time frame. The 7-day time frame does show a little bit more up above here at 30,300. Yeah, so that is interesting to note in the immediate price action. However, if you look down below here at 26,250, there is the equal thickness in liquidity building below. Kind of ambiguous and hard to read on this time frame, so we will go a bit higher to the external pools of the monthly. So the monthly, we watched that double bottom support idea. We said the 30 billion get knocked out here could spawn some divergence and you get that W formation out of here, which we did, and saw that come up, eat all the liquidity up here, came down, eat that liquidity we just talked about here, and now we are back to an equilibrium of sorts. Okay, from this immediate position, the path to 34K is starting to get paved quite nicely. I might change my tune based on how we've held this region. We'll see. Currently I'm still in that short. I slept like a baby with it open for 2 days because I don't I read what's going on and not panic. So it was like down like $100 at one point. Now we're up 16, but we'll see how it plays out. We'll get into why we stayed in a minute, but let's take a look here. This is looking like you could bang to the upside on this time frame. So this is creating a nice almost double digits the entire way up to 34K, 10 billion here and there. Whereas down below, you don't have that similar number. So the monthly time frame does suggest a continuation to the upside just off of this time frame alone. But this is where it gets tricky because you have to expand your vision to external pools and see how those add up. So that heat becomes less hot as these values over on the left change to yellow being now 50 billion and green being 40 billion and this aquamarine being 30 billion. So now you start to see some pools below get thicker as we see below 26.8, you know, 50 billion a pop in this region down below. And then up above, do you see that same level of heat just yet? Double digits up to 31.2. 31.2 has that nice $44 billion range, which is quite interesting to note. Can we see one more hit to the high or even higher before we start to fatigue these pools? The interesting thing was back in May 30th, about a month ago, we did not have that narrative as strong, but now we're getting a stronger narrative liquidity pool shift idea to 34K, which could be a possibility. Got to be ready to pivot on a dime. I'm not necessarily sold on the short idea 100%. We'll see how it goes. Let's go higher, shall we? Let's go to the 6 month. So the 6 month also paints a picture to the downside here in terms of just the pools being thick below. We've gone over this day in and day out, but just to reiterate, the pools beneath 19.5 are in the $300 billion range, and you have 200 billions or so around the 22.5 range, and the 25K region has about 200 or 300 billion if you add this up. And yeah, could you come down and scoop into this 25K pool on this 6 month time frame? It is a possibility based on just that alone. Now, when this got thick here at 29.4, they came back with a vengeance to eat up some of that liquidity. Do we have that heat here on this 6 month time frame? It's just not showing me the heat so much, even though on the monthly time frame you saw those yellow above. As we start to see this external pools and its level of heat below, this just does not seem as hot to me for some reason. So let's just zoom in a little bit more. So you got 8 billion up here, 6 billion, 30 billion, 16 billion, 26 billion, 19 billion, 29 billion, 21 billion, 35 billion, 18 billion. So you got double digits all the way up on your path to 34K, starting to get thicker up here at 34, between the 32.7 and 33.9 region, getting that 50 plus per area. So you got a good $250 million, or like, no, that's billions, $250 billion up there. All right, but you got the equal amount down below here too. It's a tricky spot that we are in. If you look below here, there is not really much on that path unless you Bart Simpson down to fill that gap. And that's what the Bart Simpsons essentially do. When there's no liquidity there, they just gap to where the liquidity is. So if it were to drop, it would drop like a rock down to this region at 27, right where it started, and then start to eat into this pool. So it would be a juicy short if it was a short idea. Let's go to the yearly. All right. What's up? Looking slick. Oh yeah, I got the suit on. I thought that would be funny to stream with the suit. But yeah, I got a wedding. I do the priest work. It's an interesting gig sometimes. I do it occasionally, but it's my last one for a while, so let's see. Is it loading? Where is it? There we go. So the yearly time frame, a bit pixelated here, so let's just zoom in on the immediate one. So we got 21 billion at 28.8 and 13 billion at 21 billion at 29.6. Interesting. So this is starting to thicken up a bit up here. You got over 100 billion now at 33.2, almost 100 billion at 32.8. So this is getting to that thick, juicy region to 33K actually. So if we look in comparison to that down below, you have less at 25.6 than you do up at 32.4. So the idea to come up here on the yearly time frame pools is not necessarily out of the question. Interesting. So we got that 30K, 13 billion, 21 billion down at 28.8, 21 billion at 28.4, 18 billion at 28 even. So you got slightly more up at 30,800, but on the path up to 30K, not as much. So you could come down to get that 28.8 pool and then see some divergence up to here. Not necessarily sold on the 25K idea, but it's interesting to note that we are getting thicker pools up here, most notably, where is that 100? 33.2, $102 billion, 33.2. And 33.2 on April 6th was 25 billion shorter than it was now. So we've induced 25 billion in so much time as a month, starting to get thick to that upper region. Let's go back to the 3-month and start to look at the fibs. So this path to the 33.2 region is starting to show itself. Interesting enough. So let's go back to the charts and take a look here. So once again, unless it can go beneath 29,232 and stay beneath it, then this could be a long to bang to the upside, in which case you would do something like this, trend-based fib. You could do it to this region, and you'd be looking for that 29,621 to these regions up above. The 32K to 33.1 region, if this holds that level. All right, let's go to another cleaner chart without the diagonal fibs. So we can delete that one. And the same idea applies. You had this impulse to the downside, the retrace to the upside, and if you break that 236 level on this trend-based fib, this is a bearish trend-based fib idea, and you would come down to that 6.5 at 27,719. Okay, so these are previous daily support and resistance levels. We got rejected off of this daily support. You have these touches over here, touch, 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 bounce, kind of meandering around here, bounce, and breakthrough. So this is the previous level we were looking at. So you have all these resistance lines to break through from daily time frames, which we previously failed at. And let's go. Look at lower time frame. So if you look at this as just like a stop loss hunt, and you don't use that as the retrace, and you use this as the impulse. Oops, sorry. It should be trend based, yeah. So however low it goes, like if this is the lowest it goes, then you'd be seeing that 29,570 breakthrough. If it were going higher, the same rule applies there as it does to the downside. And this is how you like capture a bullish and a bearish trend-based fib level. And this 236 region is where we're looking for those ideas to be negated. So the bullish narrative would begin above this point, and the bearish narrative would begin below this point. And we haven't currently gone below this point, so the bearish narrative is not necessarily on the table just yet. So let's go ahead and throw on our indicators, shall we? Let's put on our heads up display and throw on Momentum Master. What is Momentum Master? Well, link in the description, momentummaster.info for more. Scroll down to features, toggle it in its glory, like so, or activate certain components and read about them at your leisure. So as we go to we'll start at the higher time frame first. Well, first we'll go what cascaded, what we were looking to see and what happened and why we stayed in the short. All right, so why did I stay in the short for like 2 days without any movement? Well, first of all, on Momentum Master, you have these baselines, right? So these baseline crosses is what I was looking at. The baselines, these are your first sign of reversal. They are leading moving average formulas. So we had this baseline cross on Friday. That was around when I was in the short. And it just has been continually going lower and getting rejected off of the baseline. So there's been no idea of it coming back above the baseline. So I have no reason to close it, the short. So that's why my short is open and in profit. So if I go to the 6 hour, it cascaded yesterday, and we put that idea out there saying watch for this to cascade. It cascaded to the 6 hour with a drop after that. And so you're seeing the 6 hour potentially get that cascade of the baseline cross down. And it kind of crosses above the price, as you notice. So the price can't close above them, and then you get that cross, and it kind of becomes this suppression that pushes it down. Same thing here. Last week we had the baseline cross up and we held the baseline, so we were not bearish at all until this breaks, and we did have that liquidity grab we talked about to that 30 billion down here, and that created your W formation out of here. So are you going to have another liquidity grab up here and possibly come down? Who knows? I might lock in my gains because it's been open way too long at some point, and reassess if it does something like this, because I don't want to be caught on a pump. So yeah, looking at this is interesting to note. The 6 hour baseline cross down is confirmed. Once those confirmed, they do tend to play out. You can go back and back test these to be true. Upside, downside. It's kind of one of those things, you know. So that's why we trusted the indicators as we had them. So if we go to the daily time frame, one interesting thing to note is the adaptive moving average being on the cloud here, and the cloud is thinning ever so slightly and curving in a manner as such. So are we going above the cloud? Are we just going above it to drop beneath it because it's curving in such a manner? We did do that before, but surged out above it here. When you see those curving clouds and they start to thin, you could break through them. So that is interesting to note if you cannot hold this level. This 28,489 level seems like it's going to be a pivotal level of sorts. But this is a volume weighted cloud, so as the volume enters, this is getting very thick. It's getting thin because the volume is leaving, and when it leaves and turns negative, it turns purple and thins out here. So as the cloud begins to thin, a potential reversal or expansion is in. And this is one of these other confluences we like to look at, is the trend cloud. And you have a cross up here on the baseline. Are you going to get a daily cross? So the daily cross, the last time we saw that, we did see a fake out here into resistance, but if you're getting a cross up into resistance, you should have realistically been long from down here anyway. Yeah, so seeing the cross up here down at the bottoms was a perfect entry. Let's go, but we're at a premium level here. All right, let's go ahead and look at the stochastic RSI. So we're seeing this momentum to the upside, but we're lacking in volume except on this one candle, which was basically wick whacking both sides of the price, as we see here. So that wick whacking of the price was ultimately a green candle, but it was a liquidity grab on both sides. and you're seeing the stochastic come up here. You got the volume underneath the RSI, which could get a surge up, and the Williams is in an ambiguous point right in the middle. So there's nothing to glean here other than the cloud being thin and curving in a manner, and right now we have pierced above it. Are we going to come back to kiss it for support alongside this adaptive moving average? That would be a feature that likes to happen when you break through the cloud. You come back to kiss it to continue. You don't just continue without doing that. So let's go ahead and break it down to the 22 hour as it closes in a few hours here. One of the candles is already closed, I think. Yeah, it just closed at, wait, no, it will close. Yeah, it should have already closed, because it basically closes one candle in 22 hours and then 2 hours later with the daily candle close. So it's an unsyncopated rhythm system, and that broken rhythm creates probability resets in this manner, where you had this thinning cloud and we held it and then surged up. So we're coming down to this purple cloud, and so far we have seen these kisses to the cloud hold, and you're getting this 22 hour kiss continuation idea as we retrace into the cloud. Interesting to see. We've held this one and went up. We broke through it here, obviously, and looking at the 22 being overbought here with the money flow and above the price with above the RSI, and coming down here, the MACD still open. Williams could still continue here, or it could roll over. Not really. These are open at an angle which is still potentially holding here. Could double top off of this. We have seen scenarios where this happens, where you get that last surge, that extended M formation. All right, ambiguous at best, not gleaning anything specific here. 12 hour also overbought. Originally, when we were back here, when we were overbought on the 22 and the 12, I was more confident in the short, but the fact that we've just been holding this range and not breaking the 236, I'm honestly starting to lose my grit in the idea. Not as sure as I was before with the way it's holding here. So when you start to hold these price action ranges and reset probabilities, as we're starting to do on the 4 hour, the 4 hour is now completely reset, then you start to think about a possible continuation idea to the upside, even though this is overbought on the 12 and the 22 here. So are the 12 and the 22 going to continue with the Williams going higher? That could be a possibility, similar to here with this surge up on the 12-hour time frame. So we could get that grab to the upside, even though you have these cross down events. We had a cross down event here and surged up before we saw that come to fruition. These are leading, but they're not exact. So sometimes you do see that surge up before you come down, and this could be true, but it could put you in some pain before it does come to fruition. So the 6 hour coming down right now, in terms of the probability reset, you're getting a MACD cross down as well. This is what this yellow line is. It traverses between both domains of the stochastic and the Williams. It is a normalized MACD. It was extremely hard to create and normalize within the framework of 100 to negative 100. So this will cross down. First and foremost, it is a leading MACD. It's not laggard like most other MACD formulas. So this crossed down already, showing that the 6 hour maybe wants to reset completely here. Not seeing the volume necessarily step in. The Williams could get that cross down here. So you could see that 6-hour reset, which could put you down to the cloud to kiss that cloud on the 6-hour. The 6-hour is showing that flow of volume to the upside here. And if we go to the 4-hour, the 4-hour is interesting to note because we have reset the stochastic RSI. We are at a pivotal moment here with the Williams, because the Williams alarm cross is where you start to see suppression. So similar here, we had the reset of the 4-hour, but we continued much lower after that point, because the Williams wanted to dump out its momentum on you alongside the higher time frame. So this alarm cross is where it gets alarming. So this is where you start to see, does this continue further down from that point or not? So the 4-hour time frame is interesting to note. The volume here, you had the money flow above the RSI and create that bearish divergence, which continued to go down. This money flow is flowing out in a negative manner, which is more steep than before. MACD had crossed back here at the crossover event on Friday, or Thursday was it? Yeah, Friday. And yeah, so will you get that pinned? The ideal entry is where the Williams is low down here and the 4-hour is low on all of these things. So all of these things being low, and that's where you get that stochastic array alert to your phone, where these rocket ships appear and you get that dynamic alert sent to your phone. That's kind of where you want it to be. This is not the ideal long entry just because this is low. Just because one of the components is low doesn't mean anything, because the other ones are incongruent. They're countermining that idea. So we're getting kind of ambiguous signals right now on both ends of the spectrum. We have the cross down event for the short plus the Williams alarm, but you're getting the stochastic RSI oversold now. So the stochastic RSI, what is the stochastic RSI? Well, stochastic means volatility from probability from volatility. And so this is the probability from volatility of the RSI. So the RSI, it looks back 14 candles within the values of the RSI and uses math to enhance those peaks and valleys of the RSI into a probability wave of the troughs and valleys of these RSI values. So it's basically taking the RSI and zooming in, similar to a binoculars on a ridge of a mountain, and you're starting to see the pine trees and the different wildlife and bushes and things within those peaks and valleys of the mountain. So that's kind of what it's doing, is it's making a sensitive view of the RSI in white here. So does it mean just because it gets low that that's meant for a bounce? Well, it's just looking at the RSI. The RSI comes to these different points within the oscillations of itself, which have meaning. So it's enhancing that, magnifying a 300x view of that. So are we going to see that 4-hour time frame bounce? That is the question. We did hold sideways price action, and when you do sideways price action plus a stochastic reset, that is something to note in terms of that reset of the probability. Now the probability gets reset also by time for getting it. So it all has to do with the look back. I used to previously think that it was something to do with, like, you know, offloading, accumulation, distribution ideas, but it actually has to do with the candles before. So you count back 14 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So as it's forgetting all of this stuff before, and this 14th candle is all it's looking at, when it looks at all of these candles on this 4-hour time frame, the majority of them are red. And since the majority of them are red, it resets the probability. You catch my drift? So as it forgets this green in its formula, then it's going to reset. And so the fact that it holds this zone with very little change in the price action, but some slight red, is what is resetting this here. And so there's like an actual math behind it. It's not some sort of weird phenomenon. It's just the look back is set to 14 by default. Okay, so the hourly time frame is kind of meandering around and providing you with this idea of a bearish retest of the cloud, but the cloud is kind of thinning with a slight cross up here. So you're getting a meandering around low liquidity weekend. So 15-minute coming down here. Also beneath the cloud. So the 15 and the hourly are still struggling in terms of getting above the cloud, and the cloud is currently in an offloading mode. And you're in that bearish ATR range. So what's going to happen leading into this daily close? This is the weekend, so I don't expect anything massive personally, but if it cannot hold this 236, then the bearish idea is on. If it closes beneath this and breaks this blue ATR level on this hourly time frame, then you can expect it to come down to these regions below. The liquidity suggests 28.19 or 28.57. 28.57 has this thick band here. 28.57 has the thickest band overall. So a frugal idea would be to come down to that based on this 1 minute time frame of heat map. We have 6.56 billion down there to take. And then once again, the noodles up above are sparse, even though there is an imbalance to the upside for 148 million in that short liquidity just above at 29.52 compared to the 61 million at 28.89. But just that overall imbalance to longs on this small internal time frame, you could come down to that 28.57 region to take up these stacked pools and spawn some divergence for a little baby scalp. And I might do that and reassess my short, my larger idea short, because it might spawn some interesting grab to the upside based off of these imbalances that they're creating, these narratives of shorts here. And I saw that thickness starting to develop to that 34K region, so I'm not necessarily 100% bearish or bullish. I could take that possibly to the upside too. So right now we're getting some ambiguity personally because of the way it's holding here and not doing anything significant. And it reset that 4-hour stochastic, but I'm getting that mixed signal of the Williams and that baseline cross down. So far I'm trusting the baseline cross downs more than anything, so that 6-hour cross down event is keeping me holding true here, and the fact that this is still pointed down, so at least seeing the 6-hour candle close in the red and seeing where that probability lands us. So we'll see how the daily close goes in an hour and a half. And that's about it. I gotta head to a wedding in about an hour, so I gotta say what's up to my kids as they're waking up right now. So we'll just take any last questions and then bid you adieu for the day. Let's see what's up. Looking slick. Hey y'all, yo, what's up? Yo. Thank you for coming on in, everyone. So yeah, that's my level right there, 175, and we're right there. So it's not really going anywhere. It's been doing that all day. So if we look at the 8 hour, let's just check out the 8 hour. The 8 hour is thinning here, starting to show that sign of holding. Double top scenario. Weekends, man, weekends are so slow. I mean, when you've been doing like NASDAQ on the 10-second, it just, crypto goes so slow sometimes. But yeah, seeing this hourly close beneath this, like, do something, you know what I mean? It's so slow. So what are you guys up to? Any other last questions before I say goodbye? No? All right, well, that's about it. Once again, to recap, what you're looking for is that 6 hour reset at the daily candle close. How is that going to reset your stochastic probabilities here? Every time the hourly closes, or this candle closes rather, it will reset some probability. Everything resets on the daily reset. So the daily reset is significant to note on all the time frames because they will give back some probability and the algorithms will respond in turn. So watching how much of this probability is given back and where does it round out and all that fun stuff will determine whether this will start to make a double top scenario or come down to the cloud and kiss it. So I would expect something to start to occur around the daily candle close in an hour and a half. And the 4 hour time frame is reset, but during these last 7 points can get really nasty, especially if you have the alarm going in that direction to the downside. So it's not necessarily the entry point just yet. You want to get ideally 4 or 5 time frames in alignment with everything, with all the stars aligning, and even then it's not a guarantee, but you get these things here where it's all aligned up and then they start to play out. So we're not in that alignment just yet for a long. So that's why I'm still chilling in the short, because we had these 5 time frames overbought here. But that reset is getting me a little bit weary of that idea. And looking at the liquidity above and seeing that start to get paved up gets me to scratch my head a little bit more. So we'll keep you posted after the wedding. So that's my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we will bring the fire and the precision and accuracy just the same. So thank you very much, and I will catch you on the flip side. Peace.